Gold, longer term forecast for the week of December 19th, FXEmpire.com. The gold markets had an absolutely brutal week over the last five sessions as the risk off trade came back into vogue. The 1550 level has held up so far, and the Friday session showed that the 1600 to $1,500 range still looks to be relatively supportive. The overall look at the chart shows that the highs are getting lower over time, though, which of course is something for concern if you are a bull of the gold market. And let's face it, most people are. It's been up for 10 years. So this does suggest that perhaps we are slowly starting to kind of change the feel of gold itself. However, the bounce that should be coming from this area, which looks very supportive, will more than likely find a little bit of trouble at the 1700 level. So any longs at this point would have to be taken with the concept or the idea behind it that it is a trade and not an investment. The European situation continues to upset the general attitude of the markets overall, and as long as that is the case, the dollar will continue to get a bid. The sell-off lately in this market can also be thought of as a year-end position squaring, and the next couple of weeks will be very light in volume. The light volume could produce fireworks as the lack of liquidity can exaggerate moves. The mood of the market forward will be determined by the $1,500 level if we do test it. If we break below the $1,500 level, we think that about 1350 or so is going to be the base under there from which we will test. Then the bounce that we do envision is good for about $100 or so, but the headlines in Europe can always throw a monkey wrench into the progression of the markets in either direction. The rise of the dollar seems to be the biggest thing that is working against the value of the gold. It most certainly is not any kind of certainty in the markets. The markets are showing that the situation in Europe will continue to take front stage in the next year, and the headlines will have to be watched. Overall, the trend is still up, but we think return will we will return to the upward momentum in the markets in general, but it might be 2012 before that actually happens.